Hello and welcome to another episode of the MiamiHal Real Estate Show. I am Hal Feldman, and I have a great guest today because it's the time to talk about this. This is one of the best lenders I know. This is Raul Alvarez. Raul, this is like a second coming around for us, right?
Yes, it is.
But you're with a different company. So why don't you introduce yourself and what you do there?
Yeah, definitely. My name is Raul Alvarez with Guaranteed Rate Mortgage. I am the branch manager of the South Miami office, actually the Miami office, the only office of Guaranteed Rate in Miami. We are a nationwide company with over 15,000 employees, 900 branches, but we are the only branch in Miami located right on top of town in South Miami.
So I've got one of the best mortgage guys around, and you have a social media platform in front of you, and you got an empty box. So type some questions, and as we look up on our screen during the show, we'll be happy to answer those questions. Raul, Guaranteed Rate is the name of the company, right?
Yes, sir.
And that's what everybody's interested in right now. What is the rate?
Rates are crazy right now.
And when you listen, we're going to go a little bit off the beaten path of what people ask a lender about rates and how they do things, because I want to take it on a more personal level, and I know you can bring us there.
Okay.
So when somebody says, oh, the rate today is 5.2% or whatever the number is, what do they really mean? Because 5.2 is, for me, is not the same rate that you might get or somebody else, right?
Oh, definitely. So it all depends on, nowadays it's very credit driven, credit and loan to value. So it all depends on the down payment the person is putting, and then also the credit score. So somebody's credit might be worse than another, therefore their rate would be lower. Their rate would be worse.
Higher,
Correct.
right? Rate would be higher. And there's some other factors about what might be added in the way of insurances and other things. So your overall number per month can widely vary depending on the quality of the person that's putting in for a loan, correct?
That's 100% correct. Right. So we do worry about rate. Rate's very important, but I tell my clients as well, rate is going to be your fixed rate. Let's say it's going to be your fixed part of the program of your deal. Insurance is also very important because insurance rates also vary and can vary on credit as well.
Got it. You know, we're doing this all for families, and today happens to be Bring Your Child to Work Day, right?
Yes, it is.
So who's behind the camera over there?
I have my daughter, Francesca, right over there.
And she's taking great pictures of dad and enjoying herself. But the business of mortgages and my job as a realtor, it's not really just about buying and selling homes and helping people with money. It's about the family commitment that we can help move along, right?
Oh, yeah, definitely. I mean, that's one of the biggest joys and why I got into the business is helping somebody out with it. You know, I always find it, or, you know, maybe they didn't qualify for some reason that I could have qualified the borrower.
Wow.
Yeah.
And so how long have you been in the business? Because
I've been in the business since 2002.
And you were with an unnamed company before, we'll say.
Yes.
And recently we got reintroduced. The pandemic happened. Everybody, you know, was in their own homes and kind of squirreled away. Yeah. But we happened to cross paths in South Miami the other day, and you said, hey, wait a minute, my office is right up here. Small world. Yes. And I'm happy that you're back inside kind of the RE/MAX area because we're so close between offices that we'll obviously do some business together.
Yeah, of course. Very happy to be back.
Yeah. So beyond the rates, when somebody comes to you, or maybe you're out trying to market to somebody, how do you engage with somebody? What do you tell them that you can do that maybe another lender can't?
Okay. So basically our platform, let's say a Guaranteed Rate platform, is an amazing platform. It's honestly, and not because I work in it now, but it's the best platform that I've ever worked for, right? Okay. In terms of a process for a borrower. We have a different process than most other lenders. We have a two loan processor system, right? Which means your loan processor is your basically person who processes your paperwork, right? So in our case, we have two. We have a front end and a back end, right? So our front end processor will gather documents from you, you know, get all the I's dotted, you know, cross your T's, and then submit to underwriting. Our underwriting is extremely quick. I mean, we're within 24 hours right now. Once it does come out of underwriting, it goes to our second processor, which is our back end. It's called a loan consultant, the official name for us. And that one takes us to the finish line, right? That's the one that will get the conditions from the borrower and all that stuff. What's great about it is that there's no bottlenecking of the process. So loans flow.
Okay. You just mentioned a number of titles and number of steps that a loan typically takes.
Yes, sir.
And a lot of times I feel like we might be talking a language that the common borrower doesn't understand.
Right.
So what is your official title?
My official title, I am the branch manager, VP of lending for Guaranteed Rate Miami. Yes.
And I don't mean to take anything away from you,
Right.
but that's a title that's supposed to impress people, right?
Right, of course.
Okay. So somebody comes to your company,
Yes.
and they are most likely to see you. They will never see either of those two processors.
Correct.
They won't see underwriting. And the word underwriting, people may not even understand what's really happening there.
Right.
So let's slow down the process and go through that. Somebody walks in the door and they meet Raul and say, Raul, you're a great guy. So I want to potentially do some business with you. Where does your role begin and end speaking to the customer? And then we'll talk about what you do to kind of hand the ball off to get the rest of the process done.
Perfect. So basically what I do is loan origination, right? So all these fancy titles, whatever it might be, I'm a loan originator. What does that mean? That means talking to you, the customer, let's say that you're the customer, speaking to you, seeing your financial condition, your taxes, your income, your assets, your credit, and then placing you in the right program. You might, let's say you qualify for an FHA loan, 3.5% down. I would then gather the proper paperwork under that program to get you into underwriting, let's say, right?
Okay.
So once I gather that paperwork, everything is good. I know you do qualify. I do run what's called the DU, which is very popular nowadays that realtors are asking me for. It's a desktop underwriter, which is an automated underwriting system, right? Once I get that approval, that means I have a good deal. And once I get that good deal, I pass it on to my mortgage consultant, which is my front end processor, and then they take it into underwriting.
Okay. I think maybe you misspoke. The mortgage consultant is a front end processor or a back end? Because you had said back end processor earlier.
No, I have two. Right?
Okay.
So our front end is called the mortgage consultant.
Okay.
And our second one, our back end is called loan consultant.
Ah.
Yes.
I misheard.
Yeah.
Good. Okay. So there are several people in the steps, but the only person that the customer is going to interact with is you.
Correct.
Okay. Then later on, there may be some emails that they see from other people, but you're really the face of the company. And do you actually see the customer from start to finish, or is there a handoff at some point where typically you're off and hey, you're in great hands and the company will take care of the rest?
Right.
How does it work there?
So in my position, I do oversee the process from A to Z, but I have an assistant, right? So I do have an assistant, which is great. He basically fills in for me and gives that customer the daily touch that they need, right?
Okay.
Our mortgage consultant, which is our front end processor, and our loan consultant also are involved in the process, pretty much throughout, right? But let's say it gets to the loan consultant at the end. The loan consultant actually does reach out to the customer as well and does gather documents. Okay. So it's basically a big team atmosphere that this all gets done. And that's, I introduce that at the beginning of the process to the person, and it works well.
We've gotten into a world where, if you have this wonderful smartphone that everybody has, right? And you press a button, isn't the whole mortgage process supposed to happen with just a click or two?
I wish it would.
Okay. So tell us why the people that a customer works with are so important, as opposed to some of those commercials you hear out there. Press a button and all this stuff will happen automatically and magically. It just can't, can it?
It doesn't work that way.
Okay.
We do pride ourselves that in the industry, we were the first digital mortgage, as called, by some of our competitors, let's say Rocket Mortgage, the elephant in the room.
You mentioned the name. I did not. I just want to make sure everybody understands it. Okay.
Just so people know that one better. But we came out with a digital mortgage before them. And what is a digital mortgage? Exactly what you just explained. At the touch of at your fingertips, you will apply for a loan.
Okay.
If you are a W-2 employee, meaning you work for a company, it will verify your income digitally. And if you allow us, we'll verify your assets digitally. So everything is very streamlined under that process. But it still comes to a live person, which in this case myself, would come, and I would analyze everything from a large deposit in a bank account that has to be questioned to maybe they missed 3 months due to an illness on their pay stub and we have to explain all those little things. That's why a human being has to be involved.
Okay. So I think also many of the folks out there don't necessarily understand, as I put it, the 2 big steps in order to get a mortgage. The first step is the individual that's applying needs to qualify and be vetted.
Yes.
So I'll make up a number, an 800 credit score and a steady job with a W-2 and all this stuff, that's going to be a relatively easy process to qualify that person for a loan up to a certain dollar figure. Yet another person with a 650 credit score that owns their own business and doesn't have steady income, and year by year, the income is very high, very low, and somewhere in between, that becomes a more difficult thing, correct?
That's correct, 100%.
Okay. All right. So there's the step 1, which you do a lot of, which is, hey, I'm going to qualify the person and tell them what product that I can provide to them.
Right.
Then after the person finds a home, the next step starts to happen, right? Which is the asset that they want to purchase and the purchase price that they've agreed upon with the seller, does that make sense? Is it a good quality loan, right?
That's correct.
These are 2 independent steps that have to be done. And then together with success on both, you have the ability to close a mortgage.
Yes, definitely.
All right. So where does the biggest problem happen? Is it in qualifying somebody, or is it in after a home is found and trying to get to closing?
Well, it's basically in between, right? So you have to be really partnering with your realtor, let's say my referring partner, whoever it might be, and it eventually becomes a realtor. So I would partner up with you and be like, hey, Hal, this person did qualify for a $1 million loan, right? You would go and find them, or a $1 million home with a 20% down, et cetera, et cetera.
Okay.
You would go and find it. But then it goes a further step because one property may have higher insurance due to maybe not having impact windows or roof or whatever it might be, to higher taxes due to a district that it might be in, right? So that affects the qualification. So the biggest trouble that we have is at times, if you really are pushing a qualification on somebody, is that the property later could affect your deal due to other factors, not the rate, as you're saying, because we know that's a fixed number, but it would be the insurance, which you could get a home that's $1 million and insurance be $5,000 a year, and a home that's $400,000 and the insurance be $8,000 a year, due to location as well. You know, so all those factors matter. So I find it the biggest problem between my qualification and actually identifying the property.
Got it. And so there's another factor that I always tell people about. Once you, as a buyer, are qualified, you obviously know how that process works. I kind of simplify what they should be doing, which is, unless you eat it or wear it, don't buy it. Definitely. Between the time that you've been qualified and the time that you close.
Yes.
There have been very odd circumstances I've been through where somebody was very well qualified, bought a home, had the home appraised, everything looked good. And then we got about a week before closing, and that buyer went and leased 2 cars for their 2 kids. And it changed their entire financial picture, because now they've got liabilities that they didn't have when they were qualified.
Correct.
So what can you do? Look out at our audience and tell them, what should people do once they're really ready to buy a home? What should they be doing with their spending habits, et cetera?
Basically, just sit where you are. Okay. You're going on one goal right now is to purchase that home. Just sit pretty. Okay. Don't go out and buy furniture. Once you land contract, one of the number one things that we see is they go to a furniture store and finance a bunch of furniture before we've even closed on the home. And it can affect your loan to value. And the other one is what Hal said, is leasing a car or buying a car for somebody else, or co-signing on a car for a non-interested party in the transaction, which presents a problem as well. Yeah.
It does get complicated. And the other thing, which you probably don't, cover your ears a little bit, but I say, listen, when you work with a lender, if it's a good lender, even if there are problems, and there are always some level of problems getting from point A to point Z, when you have a disagreement or an argument, or they ask you for the piece of paperwork, do not get you can get a little annoyed, but understand that at the day of closing, that's the last time you have to deal with those folks. Just get to the finish line.
Yep.
Curse afterwards. and from what I know, people don't curse about you.
But
it does happen, right?
It does happen, of course.
And you just have to keep calm and get your way through it, which brings me to my next point. I obviously work with buyers and sellers. And when I work with buyers, sometimes they come with a lender already in mind.
Yep.
And it's typically the bank that they're already doing business with.
Correct.
And I tell them, if it's a national bank, you are a number. And if they don't typically do loans in Florida or in the South Florida area, more specifically, you are likely to run into trouble. So tell us about why your company and you are a better choice for somebody that hasn't made a decision yet on who they're going to go out and get a mortgage from.
Yeah, definitely. Even the people nowadays, especially when you ask about the digital platforms that people are using, sometimes you might go rate shopping on the internet, click on something, but then you're dealing with somebody in Ohio where their appraiser is located. Let's say, they hire an appraisal company and it's in West Palm Beach, which is 2 hours north of us, right?
Yeah.
So they don't know the area, et cetera, et cetera. So in terms of really shopping out a rate, let's say, or an experience, right? I always, that's where we come in. I'm on a national platform. I do have the advantage of being part of one of the biggest retail lenders in the United States. Therefore, my pricing is excellent. My rates are excellent. I will compete against anybody on the internet. I have no problem, So
and it's one thing, by the way, to advertise a rate on the internet and then actually deliver that rate, correct?
That's 100%. And, people always tell you, no, I have great credit, on my Credit Karma. Well, Credit Karma is not typically a FICO score, So they're a little bit different, But yes, so I do have that national platform, but at a local level here that you could walk into our office at any time. We're not invisible. We're present.
Okay. So now we've got interesting times, right? We're on what I would consider the end or the nearing the end of this unprecedented rise in prices and a ton of competition because there's not enough inventory. How did your company adjust so that people can have an advantage beyond saying, hey, I'm qualified for a loan? How can you get people to stand out from others potentially? And I'm really kind of guiding you toward the time it takes for you to do what you do in the way of providing that loan.
Our loan process is basically one of the fastest loan processes out there due to our process. We're basically closing between 20 and 30 days right now, really closer to 20. I mean, I had a clear to close in 14 days the other day, and we're just sitting on it now because nobody's ready to close.
14 days. You were ready to close.
Clear to close.
Okay.
Ready to go.
So that's a big deal because we'll call it before COVID, right? The typical amount of time needed was somewhere between 30 and 45 days.
Correct.
Now, was it just artificial that it was taking 30 to 45 days, or did something fundamentally change in how your company and others out there as well got to 14 days, for example?
Great question. So during COVID, it was a little bit special, right? So I'm talking 2020 COVID, true COVID times.
Yeah.
What happened is we also experienced a refinance boom, right?
Sure.
So our rates dropped to under 3%, and that caused a big refinance boom, which bogged down every single company, right? Every company was bogged down. Our company did well, but still bogged down, so our time changed during that, that was COVID though. Now it's different. There are companies out there with longer underwriting times, different process. There's great companies out there, but we do pride ourselves on the short process.
Perfect.
Yeah.
So we're going to put on our use our crystal ball or put on our thinking caps and try to capture the essence of what's going on. And I always tell my audience, as a realtor, and I'm sure it's true for you as well, Raul, when we're in the business, we are seeing things happen about 60 days before the media typically does.
Correct.
And why is that? Because we're the ones actually showing the homes, right? And typically it can take 30 to 45 days after a contract is signed to get closed. And so we're automatically ahead of what's coming and the data that will be massaged and put out there, right?
Yes.
So I noticed a very significant change starting about 2 weeks ago. And we started to talk about this before the cameras were rolling today.
Right.
Tell me what you're seeing in the way of refis, financing, and just the demand that you're seeing at your front door.
Yeah, definitely. So refinances obviously have gone down in terms of your normal rate and term refinance, which is only refinancing what you owe on your home to get a better interest rate / better payment. So in we're seeing that we've lost that part, right? I am seeing cash out refinances still. Cash out meaning since the market is so competitive, people have gone out to look for homes, have not found it, realize that they do like their neighborhood, and maybe cashing out to do an addition on their home. So we do have those still going on. In terms of demand, since the inventory is low, we still have a good demand on purchases. But people's purchasing power is also limited now. It does get limited. Have people, on the lower end spectrum, let's say, looking for a $300,000 property, very difficult, very competitive market. Well, they no longer qualify for $300,000 based on today's rate. That was based on January's rate, right? So now they qualify for maybe 275 or 260. So that limits purchasing power, and go ahead.
Yeah, no.
Oh, okay.
So
Yeah.
What's the future then? You said, and what's the future for the business? Because everything's interrelated. If you pull a rubber band on this side, something else has to contract on the other side. So what do you feel is going to happen to the overall real estate market? And I know that's a prediction, but what are your thoughts for, let's say, the next 6 months?
I mean, I think the next 6 months are strong still due to limited inventory, right?
Okay.
But eventually as these rates, if they continue to rise, and the problem is that the rates are still good historically, right?
Right.
They're not historically low, the lowest, but they are historically good. The problem is that if we continue to rise quickly, a $500,000 house no longer costs you $3,000 a month. It'll cost you $3,800. So what happens? Less people will qualify for that home. Less people will look for that home. Therefore, marketing times will slow. And I think our market eventually will slow, which is not a bad thing. I think that'll cause more inventory and not cause, it make our lives as realtors and mortgage professionals different. Every deal, it seems very hectic, right? Especially in trying to land that deal. I mean, I get phone calls at 9:30 at night. Hey, Raul, I'm putting in an offer. I need the new pre-approval today because they needed it by midnight. And I'm having to, do that at that time of night because I tell them, don't worry about the late call. We have to do it.
Yeah.
Because if not, you're not going to get the home and I won't get the deal, So.
And we all want the housing market to move forward. We
Yes.
want people that want to buy to find a place and to be able to close.
Definitely.
And so we're here, unfortunately, sometimes at very late hours, and I do it, and sounds
Yeah.
like you do as well.
Yes.
Let's dig down a little bit on two things. The first one I want to talk about is rate lock.
Yeah.
Because when the rates were low and they weren't bouncing around or bouncing up, people really didn't pay attention to that rate lock. But now it's becoming more important, and I don't think people understand what that really means and how the times work and how you can, pay more money to have that rate lock extend. Take a few minutes and talk to us about rate lock and what's typical.
Oh, yeah,
there.
definitely. So rate locks are very important, especially in this time where rates are changing hourly, sometimes daily. It's a very rapidly changing environment. In the morning, for example, yesterday we had 2 price deteriorations, which means we had worse rates throughout the day. So in the morning, if I locked your rate in the morning, you had a better rate than if you would have called me in the afternoon to lock your rate. So locks, how does a lock work? Locks are 30, you could do a 15-day, but 30, 45, 60-day lock. Typically, they're done once you identify a property. We do have a program which we are able to lock your rate prior to you finding a property. Okay. What happens is in this environment, it's tough because sometimes people take 30, 45, 60 days to land a deal.
For sure.
So your lock might be limited at the end, right?
Let's say they took that option though.
Yes.
So they come to you, they go, wow, Raul, you got me a great rate. I want to lock it today because I don't want it to go up. And we all believe it's going to go up from here, right? So they lock in at, let's say 5%.
5%.
Okay. And then it takes them 3 weeks to go find a property.
Yes.
Okay. So let's say they took a 30-day rate lock.
Okay.
And they're 3 weeks into that already.
Right.
And then they identify the home. They're not closing in 7 days.
That's correct.
So what happens? What are their options at that point so they potentially don't lose that 5% rate?
Perfect. So typically when a rate expires, there is a cost associated to a rate expiring, right? So basically in our business, we as a lender, we're buying money, right? So let's say the person, it's a $500,000 loan. We just bought $500,000 at 5%, right? So we locked that rate. We held that money for 30 days. Typically in a normal market, markets have been staying pretty much the same. So a rate lock might cost, an extra 10 days cost you 0.1%, let's just give a number. But what's happened now is, you always want to extend, right? There were times before when the rates do drop that you sometimes
let it expire, right?
You let it expire and you go, well, typically it's worst case scenario, but there was a time and you could get a free rate lock. You'll never get a lower rate, right? So when you lock, there's different circumstances, but I'm just talking, speaking generally. When you lock that rate, you got to be happy with that rate, right? Because that's what it's going to be. But if it does expire, there is a cost to extending. We offer daily rate extensions. Maybe we missed by 3 days, and you're able to do a 3-day lock, so the person doesn't, 3-day rate extension.
And so that is a one-time payment to kind of keep that rate, or am I misunderstanding?
It's a one-time payment. Basically at closing is what happens, right?
Okay.
Sometimes, as we call it, we eat the cost, depending on the customer, the deal, whatever it might be. We do.
It's a business. So if there's enough margin for you,
exactly,
and it's only 3 or 4 days, you go, you know what, we'll take care of it.
Exactly. Right? We do what's called a pricing exception, and we do take the cost on.
Okay. But what happens in the scenario that I gave, which is the rate lock, they're 3 weeks in, they finally find the property, and it's going to be another 30 days for them to close. So they need a 30-day rate lock extension. What kind of costs are we talking about? Let's say it's a $700,000 property.
So you're probably talking about maybe even up to a 0.5% cost, right? Wow. Which is like a discount fee, as we call it. Okay. So that's what typically a 30-day lock would be. Okay.
So that's after you lock in a rate, and if you need additional time, there's a way to kind of make that work.
Right.
There's also a term that somebody could not a term, but an instrument that somebody can use to what they call buy down the rate.
Correct.
Okay. So this is before you even get a rate. What's buying down a rate, and how does that work? Because it just seems a little counterintuitive, at least to me.
Yeah. So what's great about today's lending, after 2010, after our real estate debacle that we had, after 2010, one of the good things that we went through is us as a mortgage professional, I cannot make more money on any deal. Like, for instance, you come in the door and I know I have to price you low, I could give you a 5%. But if Joe comes through the door and I could see him, I could charge him 5.25 and maybe make a little bit more money. Wow. That's illegal nowadays, right? So it's very transparent, our lending world. So what I typically do, I show people what's called our par rate, meaning that's the lowest I could give you that my company will fund, right? So let's say it's 5%.
Okay.
5% is your par rate. If you say, no, Raul, what if I paid a point? Okay, let's check it out. I open up the spreadsheet and I'll give you, you could choose your rate. 4.75 cost a point. Oh, perfect. I want to pay a point, which is 1%, and I'll get 1% of the loan amount.
And that's up front.
And that is up front, not right there at the time of locking, but at closing. So it is up front. It's a one-time fee.
Yeah.
And you will get the lower rate, right? So sometimes it's worth paying a point. Sometimes it's not, or a discount fee in any sense.
Got it. Raul, you have been a wealth of information today.
Thank you.
You know what, Francesca, you've been nice and quiet. Come here quickly. Come on, let's go. Bring it around. Francesca, you're going to get a chance to say goodbye to our audience. And Raul, while she's doing that, if you wouldn't mind, just tell everybody how they can get in touch with you if they want a great family guy who's going to give them a loan.
Thank you so much, Hal. My name is Raul Alvarez with Guaranteed Rate. My cell phone number is 305-979-9323. My office is located in the building of town. And my email is raul.alvarez@rate.com.
All right. There you have it. Great information today. Every week, I've got a great guest on. So until next week, have a great week in real estate. See you next time.
Thank you.